I've been a data engineer for over 8 years now. I've been near petabyte scale, mostly in financial services. I've worked in tech as well. I've worked for Pinterest, namely Nomi Health as well, doing data engineering work. And As a business owner, I've had my own consulting business. I've come to find that the protections that people assume are in place, namely the court system, the legal system, are just considerably lacking. I think the legal system is antiquated, and the technology, it's time for it to replace it. And that is what this project is. It's what intends to be the world's first legally enforceable AI arbitration system. And we can go into the deck and discuss that. Sure. So it's a mobile application. It would be the first of its kind, assuming the legal enforceability is granted. It's not a requirement, however, and we can go into that. So Scro, what it stands for, it's sort of a backronym, is escrow, which is a key feature of this. It's essentially using escrow accounts as a protection measure for any size transaction. They're common in real estate for very large transactions. There's a considerable amount of time that's spent resolving escrow protected transactions, usually with a lawyer. And so it works as a protection measure in advance, essentially. So, and the largest thing is that the seed for this idea was just how frequently fraud occurs and how little is done about it. It requires in the United States, you have to prove intent. So you have to prove that the person intended to defraud the other party for money. And proving intent is almost impossible. So if anyone's the victim of a fraud situation, you go to a police station, they just tell you to leave because there's nothing they're going to do about it or can do about it, essentially. So that's why it occurs more frequently than people think. It's, almost 100% of fraud is just not reported, $1,000 and below. And, beyond that, very rarely does anything occur from fraud. It usually results in some type of other damages that occurs. So it's usually settled if it does reach a scale that warrants getting a lawyer. And lawyers are expensive. They're very expensive. There's a lot of time that needs to be spent evaluating a lawyer. Are they going to do their job well? Is there any proof and things of that nature? So it's a more common problem than people think, and something that I've experienced once or twice from large companies. So it does have a personal origin. Like, for instance, I won't name names, but it was a office provider, so office space provider in New York City. I wanted to sign a lease for an office. So this is the one. This is the one I signed for. And then in hindsight, it kind of made sense how they were able to do this, but I signed for it and show up. It's not the one that I asked for. It was one that was it was a non-desirable one. So they kind of pushed me into it. They said it wasn't available. I said it was available. This is the conversation I had. They were trying to get me to pay with cash, which is a red flag. I mandated must pay with credit card. They said their machine was down, like their credit card processing was down, which is another red flag. And it was a good thing I paid with credit card. It wasn't what I asked for. I did a chargeback. And, kind of lead into that, a chargeback is an escrow system. It is one that is not legally enforceable. So they could sue, or they could have, they're not going to, because they said they're not going to. They could turn around after a chargeback and sue me, or anybody that uses a chargeback. It's not legally enforceable. So there's kind of a gap here of what protections there are. So I did threaten to sue them. It was an arbitration situation initially because they were trying to sell to a debt collector and things of that nature. I said, do the American Arbitration Association, which is what the contract said. It's going to cost us much money, which will be your fees. And then they folded after that. So if I didn't have, I spent 3 months dealing with this problem. It was a very time consuming problem. I didn't know if it was going to happen, and it was also in arrears too. So that after the fact is what I mean by that. And so recovery trap, sometimes it's the cost is greater typically than the recovery that you expect in a legal situation, which is why these situations happen more frequently, as well as the intent aspect. So people will just, I've seen it happen before. People will defraud another. They know nothing's going to happen because they would have to sue them, and that's expensive. And so just kind of gets let alone. So very high median, well, the median victim loss is far less than the average recovery cost. So it explains this gap that I strongly believe that technology can fill, and what I intend to do with this application. And then on the other side, so protection for the buyer, there's also protection. There's issues with the current state, especially with respect to chargebacks. So if you do an online business, for instance, and you have a lockup period of many months, because what they're doing is, like Stripe and other payment providers, they're watching for chargebacks. So they have a chargeback, essentially a reserve. So it's a loss reserve that they keep, and that locks up the funds for the vendor. And so the very high lockup period, none of it involves proving if something actually went wrong, or if there was actual fraud. They're just looking for a chargeback. A chargeback is very one-sided. It's one-sided for the consumer. They essentially have to prove, they don't have to prove much. Essentially, the burden of proof goes to the vendor. And typically a chargeback results in a buyer receiving their money back, whether or not there was actually an issue. There's nothing that's actually evaluated. And so what my vision here is, a mobile application is legally enforceable by adhering to the FAA, the Federal Arbitration Act, which essentially you have to prove unbiased, and tenable with respect to costs, which this will definitely be. The costs are very low compared to the legal system currently, in an entirely frictionless manner. And by frictionless here, what I mean is that all aspects of a legal process, including actually gathering the data that can occur in a transaction, is done by this application, as well as the judgment, as well as simulations. So one could actually simulate a situation and then see what the outcome is. It makes it deterministic in a way, with respect to the functionality of the system itself. So it's also protection in advance by using escrow. So it's a protection measure. The money is deposited into the escrow account. It's held there until the transaction's done. The vendor has to prove that the work was done according to the spec, and the spec can be generated. The contract will be generated by this application. Currently, it does that to a limited degree. On completion, it will pay out in total to the vendor, or if there are issues or if there are damages after the fact, those damages could be collected, or before the fact, if the evaluation process is able to determine that the contract wasn't done fully to spec at some percentage output. And then the enforceability here, what that means specifically is that, given a judgment and there are damages, the legal system of the United States could actually collect those damages from the bank. So there would be a freeze on assets, on things of that nature. So essentially using what exists, but automating the judgment part. And then also with respect to how this could operate in advance, in advanced protection, is borrowing innovations from financial services. So in swap markets, which is one of the reasons why credit flows so freely in the United States, is something called bilateral netting. So what that is that if a vendor, for instance, in this case, a vendor has a number of transactions outstanding in the system, it's essentially a clearing ring. So it could be vendors pointing to each other, to buyers can be vendors, and vice versa. There's essentially, if a vendor doesn't do something, there's some type of damage event that occurs. Instead of withdrawing, freezing their assets and withdrawing, it's actually taken out of the other transactions. So what those complete or they have completed, there's a small lockup period, and then the damages could be taken out of that. So it mitigates credit risk. So counterparty risk in this case. It's an innovation. It's been around for a considerable amount of time. It's essentially just netting payments. So borrowing an innovation like that would be useful in this case. Another is posting a bond, which would be in the case where a vendor wants or a buyer wants financing. So a bond could be posted. And the reason for this is there's a conflict of interest that occurs. So by offering financing that this service could do, it's tentative exactly if it would break too many laws or if it's not possible to do this, but they could post a bond. One of the counterparties could post a bond and it could be revocable if in the event. So it would actually cover the lending that occurs. So it could be risk weighted, which is another innovation in financial services, risk weighted pricing. So that's another borrowed innovation. Another one is, so let's say something called, I call it this enclave. So it's like you have a digital asset, for instance, or something that one party does not want to give to the other party. It's the completed work. The other party wants to be able to see it without actually having it in their possession. So what this does is it's a way to actually view it. So they can view a sample of it. It could be like a deck or something. You take one of the sheets to actually verify that it's what they want. So it's an advanced protection. That's something that could be visible on the mobile phone. So something that would actually prevent, sending the completed asset to the other party, if they're not satisfied with it, or if there's some issue. And then also actually implementing a quality judgment. So for instance, you have like a contractor and you pay them a lot of money, or you're supposed to, they do the work and it's just not even close to, what they're supposed to do. Like there's some, issues with the plumbing or something that they, as a contractor, should absolutely, not have an issue with doing. So some type of quality judgment measure could be put in place, and that could be accomplished with data science. So looking at what is like a 10 standard deviation or some standard deviation in terms of quality, or some type of event, determining what type of event would cause a quality issue. So having some type of mechanism to actually evaluate the quality of a transaction and then making a judgment on that. The case law is pretty limited on that. So this would be a true innovation, more or less, with respect to implementing the service. And this is the product. No offense to vibe coders, but I've spent the past week cleaning up for my former co-founder who was a vibe coder. And so it's a little buggy, but and what this is an influencer. There's a few other examples, but there's like an asset sale example, but this one is an influencer. They're supposed to promote a product. It's Curaprox, and but it's also a specific contract. It's a very objective contract. It's like they say these words that are actually randomly selected from the video, from voice to text. They say these words at these intervals. That's what the contract requirements are. So they do it. It's a binary yes or no. There's no quality with respect to that. But here you go. So this is the buyer side on the right. And that's using Anvil as the left is the vendor. So it's essentially a contract. It's generated. It's an influencer marketing agreement. And it's still buggy, but it's also possible to generate the contract. So they describe it. They give the counterparties. The counterparties are registered. Things of that nature. Yeah. So sorry about this. I'm trying to thought I would get it done in time, but what happens next? So they sign, and then a judgment occurs, and so it actually scans. These events happen? How this operates behind the scenes is there's a you have a contract. There's requirements. Those requirements, it's determined if it can be observable or not. observation, through any means. So if it's an influencer contract, they're on TikTok. It mandates they're on TikTok to do this promotion. It scans their videos and then pulls the video. Currently, it's manually pulled because we don't have API access with TikTok yet, which requires going through some hoops. But it's essentially a contract to code, so it generates the code necessary to observe, and that can be applied to anything. So that's what next step would be, is making it more more thorough with respect to what it is able to do. So this unfortunately we get done in time, but what happens next? It shows the video. It gives a true, false, or hold. So if they actually satisfied each individual requirement, in this case, there's 5 requirements, and then it outputs. They can withdraw from the wallet. So it's just frozen right now. But yeah, so unfortunately, and so the idea though, it's it's fixed, but okay, yeah. So and most interestingly, there's almost nobody that's doing this idea or implementation. There are escrow providers. There's only the closest one is Paykeeper, and they are not AI centric whatsoever. Really, they say they're using AI for evaluating contracts, but they're not. It's just like for very specific industries. It's very limited in their AI usage. There are escrow services that have existed for some time. They're not using AI at all. Mostly, they're not mobile. Wafi is in Europe. TrustApp is also in Europe. They're the United States, the closest Paykeeper. None of them are legally enforceable. So if one of the parties didn't like the outcome of an escrow determination, then they could sue the other party. So it's really no protection in the end. So that's what the goal here is, to get that legal enforceability. So all decisions are final, and then damages can be collected, mandated as part of that. So that's the and it's also, they have many employees. They have they're in the over 30 for on average. So it's this is not, it's just a few technical staff is really all that's needed to do this. It is mobile. It will require some observation and monitoring, but with the innovations that we have with respect to observability, it's much easier now than it was 5 years ago to do that. Very lean. I don't expect many staff that are needed. And it's myself. I'm technical. I've done most of this work. I'd have to bring in somebody that actually understands the software that they're writing and not just vibe coding it would be necessary. But not many staff, and the employees are the biggest cost. So if very lean, it's profitable pretty quickly. And this would be a first mover in AI usage for arbitration. There's no company that does that. I think it's the legal system is something that everybody has had difficulties with if they've dealt with it, and they also the cost and the economic gates that it has. This is what I intend to be something that is disruptive in a positive way. Everything is done by AI. There would have to be, as part of the FAA regulations, a manual process to review any outcomes, especially in a dispute with the outcome. But more or less, this would be in-house. And so their flat fee, $500 per case, 3% of deposited funds that are used in escrow, if escrow is used. Most of them, what I expect, would use escrow. 3%, which is in line with the credit card, but it could be split between both parties. It would be cheaper than a credit card. Subscription model as well. There's also API fees. So essentially the lawyer action. So this app is the judge, jury, not necessarily the executioner, because it's, that we're in the 21st century. But the lawyer it is. So it actually does the extraction of data, discovers the data that could refute something, could refute a claim or support a claim, which is another example that I have in mind. It's like an asset sale, this person is saying, okay, there's this laundromat is cash flowing $600,000 a year, and it's like, okay, is it really? Like, how do they? Are you going to get to the table, and then they're just going to say trust us or something like that? This would be a means to actually determine that. So this example I had in mind is they have an accounting software. This hooks up to the accounting software. The contracted code actually generates API calls to the accounting software. They provide a secure credentials to access that accounting software. It pulls it and actually determines what they've claimed, if it's true or not. So that's what this lawyer aspect would be. It would be an actual determination, the actual discovery process. So it's a discovery mechanism, like in a court system. And then also the buyer and vendor financing, which is tentative given the conflict of nature that would cause, and it is unknown at this time if bond posting would mitigate that entirely. The TAM in SAM and SOM are rather large. I mean, it's legal service spend is very high, largely because of lawyer cost, and then also the actual damages that occur. There's a considerable amount of disputes that occur in the United States. So that's in total, that's a global value, not a. So it's 50 billion in SAM in the United States, and then capturing some percentage of that. It is possible to get pretty high annual revenue with a small market penetration, relatively small number of disputes. So that average fee is a blend of the API costs, the actual arbitration fee, as well as the escrow funds that are output. And the unit economics, just given the fact that the employees are the greatest cost, is that the unit economics are pretty good. So assuming only $650,000 in employee costs per year, profitability is achievable at only 17,000 users. The unit economics are good. It's relatively cheap. The ML capabilities aren't that great, aren't that high. In terms of cost, there would be some GPU usage. So it assumes that GPU usage is relatively flat and relatively flat. It's possible they could spike. They have been spiking continually, but there's a significant gap between costs and their profitability is relatively certain, relatively quickly. And then just the slope is relatively flat just due to we're using fast API, BentoML and EMR, AWS EMR, very efficient with respect to the number of query hits that occur, which are assumed to be 75, 8, and 25 for fast API, BentoML, and EMR per transaction. So it's the tech stack is already determined. The tech is pretty cheap, and the costs are pretty low, is the point of this. And I've worked in financial services at the near petabyte scale historically, and I branched out of financial services, which is where I got this idea originally, as well as just my experience in the business world, the lack of protections that exist with respect to fraud, especially, but just in general, the court system. And I've master's in quantitative finance, which is something quantitative finance could be used to determine that percent payout. That's something I've been thinking about considerably. So maybe that percentage payout could be an arbitrage type of argument. So that's just something that keeps reoccurring in my head. That might be a way to objectively determine what that percent payout problem solution is. And so asking for $1 million pre-seed at $8 million post-money, majority of which would be product engineering, especially sourcing data. Currently, how data is generated, it's random. Essentially, We have 20 terabytes of multimodal data from random public sources, and then what we're doing currently is we're generating transactions, something that's plausible. It's we're clustering the data, the multimodal assets together, sound, video, images, text, just together, making something plausible. So what a next step would be is having appropriate data from a data vendor, and then starting to train on that data, and then generating transactions from that, evaluating if the outcomes make sense. And also that would be part of this FAA application, the federal level, if you're able to prove unbiased, which is a requirement, which is what the simulation aspect would be. That would greatly assist that. It would greatly assist having truly plausible transactions that have an arbitration process and just seeing what the outcomes are. That would be next. So majority of the spend would be product engineering, as would be required for especially something at the pre-seed stage. And yes, so that's Scro, Scro backronym. Thank you very much.
Awesome. Thank you, Ben, for this great presentation. Great project, very important project, and very well developed. So let's bring our judges to the stage so we can start having our conversation. We can see now that Gayatri and Naga arrived. Would you guys mind to introduce yourselves? So Gayatri, could you please share a one-liner on your
Sure.
expertise, what you work on, and what you've been doing?
Sure, Augusto. Yeah, this topic that Ben, is that right?
Yes.
Ben spoke about is really interesting. Like I pretty much work in that same field. I work at Capital One. We deal with a lot of like underwriting for business bureau cards and also the credit limits, the networks that you talked about, Ben. That was really interesting. I also work in some of the credit line increase programs. And recently, I've been part of this small business banking where we are seeing a $20 trillion business that's waiting to be exposed, which nobody has actually, tapped into. So I'm currently working in some of the AI projects and overlooking some of the generative AI projects within my company and trying to see how we can derive value. I know there's a lot of hype around it, but I'm trying to really see how it can be used for production grade application and how we can derive value out of it. And I've been judged at several of these hackathons. I think this is my second hackathon with Augusto.
Awesome. Yeah, thank you.
Thanks, Ben. That was a really great pitch. So I had a question about trust. So when you're saying that both buyer and seller needs to be onboarded onto this, like what would convince both the parties to trust the system, since it's based on AI and they might think that it might be biased towards the other party. So what's your take on that?
Yes, definitely in the simulation aspect. So that's something. That's another thing that the competitors currently do not address at all. So they are entirely opaque. So I would like this to be transparent, and that would be they'd be able to see a simulation occur in front of their eyes. It's like, okay, this is a situation, it's entirely randomly generated. Here's the outcome. It makes sense, because it should be objective. If something is done wrong, it's in violation of either a law or some type of legal precedent, it should be known in advance. There shouldn't be indeterministic with respect to the system. The inputs would be indeterministic, but the outputs of the system should be deterministic, given that. So the simulation aspect would be making this transparent. That would be something that I would put online on a dashboard. It would be essentially a random, like interactive capability, or they could do something. They actually could see the outcome of a situation that they're in. All else equal is how I would address it.
Awesome. Perfect. Thank you. Thank you for your question. Thank you for your answer, Ben. Ankush?
Sure. Uh, Thanks, Ben, for the presentation. Love it. I have one question regarding sensitive data. Like you mentioned that this platform may collect contracts or communication or any financial information from the parties. So, how do you protect any sensitive information while giving that info to the AI so it can provide a reasonable output?
So having essentially a sandbox. So if there is sensitive information, the AI does not have access to the internet. So something like that only has access to the files that it receives. Then there'd be encryption, in transit, and nothing would be stored. So no storage of sensitive data, or if storage is required, maybe it's just injected temporarily into that sandbox environment. It's not able to access the internet or anything like that. It's entirely blocked. It could also be if there is, if it involves a company that's within the cloud or something of that nature, it only runs in their VPC. So they would have the ability to control that, or it just does not have access to anything outside of its purview. That could involve setting permissions correctly. It would run within our cloud from the get-go, but it would be in an entirely sandbox environment. That's how it would be addressed. But anything that's sent is ephemeral as well. So if it has to be stored, then it would just be deleted. The enclave aspect, it would just be deleted at the completion of the transaction or before then.
So thank you. My question was also about some of the approvals versus denials. Like you were saying that you were going to take this system to also have some of the credit traits. So how do you have how do you make sure that there is no bias, and also is there any human in the loop for some of the important decisions?
Yes, human in the loop is a requirement, and it would be that would be a major expense. So having uh, observability in place, and there's some ideas I have in mind. So the center point of the AI is the contract to code. So you have the contract, it derives the requirements, what needs to be done, and then outputs code to observe those requirements. That portion is where bias can occur. So if the code is just doing something that doesn't make sense, there are in advance mechanisms to do that I have in mind. So essentially checking for a hallucination on the output code. Do all those, does it actually run? First off, it's essentially applying unit tests on the output code, and then also comparing with history. If you do a large enough number of simulations, there would be a way to create a vector. Essentially, you group the outputs together, and then you can actually compare the outputs and the frequency of occurrence. So essentially be a data science solution. So actually, measuring the precision and recall, and then, depending upon if it's a regression or not, the other loss functions, things of that nature. It would actually be a data science approach, an relatively objective approach to identifying bias if it does exist and then addressing it.
Thank you, Ben.
Thanks. I just wanted to build on top of whatever Ben just mentioned. By the way, great pitch, Ben. You just mentioned about hallucinations. So, in your development and testing so far, have you seen hallucinations? Like, can you give us an example? How have you handled that? And also in terms of accuracy, whenever you're talking to an LLM, there's always a risk of accuracy. So, how are you dealing with those concerns?
Yes. So essentially, currently, for example, we have this process, this job that's generating these contracts where it's state X at time Y in between this interval. We actually choose videos. We know in advance what the actual, if it happened or not. So it's basically doing a labeled approach. So and then counting the frequency of being inaccurate, which it's fairly high right now because we're using the small scale models. And well, it's not, it's high in the sense that it's outputting things that it's like well, the sound to text, the transcribing, it's sometimes incorrect because we're using Whisper, which is the small scale version. So it's a function of that. But we've seen it currently because it's all running locally on my machine, except for the external LLMs, the contracted code. So we are seeing it. We're addressing it by measuring it by having these labels. So these videos, here's what's said at these intervals, and then comparing what's output. And then broadening that will be an exercise. That's where modeling could come in. And also being able to address what might go wrong in advance. Like that was something we addressed that could go wrong. The actual output words are not in the actual video whatsoever, or this what is labeled is not actually present. So that's the approach we have currently.
All right, thank you.
Hey, my name is Naga. So, Augusto, I can't hear you, but still, I'm going to ask some questions. So, Ben, like, how are you handling AI hallucinations, especially bias, trust, and security? Especially if some users are gonna use your use your outputs from it, like, or make some decisions from your outputs.
Yes. So the contracted code currently run. So its output it actually does. We pass random data, so it's generating functions. Pass random data, see what's output, if it's even possible, or if there's an exception or something like that. So being able to address that, there's different severity with respect to the output. So it's like you have the output code. It is outputting code that just doesn't make sense. It's those objects are not present. We actually have initial code in place. So it's like you have Python version, you have library.
Yes.
We have we actually specify what you can only use certain libraries to do certain things. So we're narrowing down what can go wrong. We have very specific indications of what it can and can't do. So it's essentially guardrails on what it can actually, the actual Python libraries it can use. Currently, we're only using Python because it's generating so much. We could move to compiled, but that would be a different problem. It'd be faster, but it'd be significantly larger. So something I've thought about, like maybe Rust, but that's an approach here. It's like the narrowing what type of code it can output. So only well libraries like the request library, the built-in libraries for Python, the standard library. So ideally those, in the rare case where it needs, something that's not in the standard library, then using it, but choosing one that is well tested. I like Apache framework libraries is a preference, something that is basically a scientific standard. So it's essentially trimming what can be output.
Okay, but how do you scale trust if the user base grows? How do you scale that? Like,
yes, the essentially if target by industry. So we could scale out by industry, but also by observability. So there's essentially you can have an event. So an event is a transaction where some external event that's occurring. It could be a weather. So the temperature is that's another example I have. It actually observes that using an API. That's an event, something that's objective. So being able to ideally initially only view work with transactions that are objective, like for instance, this isn't the phone that I bought, or like a reseller is, like going to a meetup. The escrow would be a protection mechanism for him. Like I've seen videos where they go to a meetup to sell something. It's a robbery essentially. So a robber wouldn't post into escrow, so they wouldn't go to it. It would be an advanced protection. Starting small is the point. Starting small, starting objective, as opposed to, and then growing into industries where there is more that could be possible, like the quality measures that would come later. So starting small, objective.
yeah, exactly. Like early adopters, like can forgive all the bugs and everything. Like
Right.
soon you would need to have everything like a sustainable platform. So yeah, thank you. Thanks, Augusto. Thanks for the opportunity.
Awesome. Thank you. Thank you, guys. Thank you, Ben, for your project. Do you have any way of people find you, people reach out to you? By the way, I'm gonna come back to you guys, to you judges. I'll present a quick project, so we can close our 1 and something hour. Don't leave, please. Is there any way to reach out to you, get to know more about escrow? How can we find you?
Yeah, so we have a website. It's a landing page, very basic right now. I can be reached by email, ben@scro.digital. Is there, just in the chat. Yeah, so Ben at Scro.digital, or have a LinkedIn, but it's not allowing me to do the chat. But so it's just Scro.digital is the website. There's contact information there.
Okay, awesome. Thank you, Ben, for participating.